Hello and welcome to one more video on Portfolio Managers Distribution Certification Exam, which is conducted by NISM. In this video, I will take you through chapter 2, which is a very easy chapter in the sense that it covers the basic concepts of the securities market. So what you learn is these three aspects: basics of securities market, primary and secondary market, and various market participants. So we start with securities market. So this is a word which is used frequently, interchangeably in different contexts, right? So securities market, basically help in efficient flow of capital for the economy. So they make capital flow much easier than what it will be otherwise, right? Um, if a household has savings, they can give that savings to business, and business get this money in various forms by issuing securities. They list the securities on the stock exchange to ensure that there is liquidity, right? And they keep on providing information about security, financial and non-financial information to the household, correct? But all that is fine. How do we kind of give a very precise meaning to the word securities? That's very important. So the word securities has been defined in the Securities Contract Regulation Act. You can use the word the way you want, but legally it is given as a definition, okay, here, right? And it says that securities mean shares, scrips, stocks, bonds, debentures, and so many things. Derivatives are also securities. Collective investment vehicles like mutual fund, AIF, REIT, InvIT, they are all securities. Securities receipts are also securities. Okay. What else? Units of any such instruments issued to investor under any mutual fund scheme that do not include any unit links, insurance policy or scripts or any such instrument or unit by whatever name called, which provides a combined benefit of risk on life of the person and investment by such person and issued by an insurer. So please remember that this is an exclusion. So if there is a question in the exam which asks you, is ULIP part of security, then you know the answer. The answer is no, right? So units or any other instrument by pooled investment vehicle, any certificate of instruments, by whatever name they are called as, to an investor by an issuer, being a special purpose distinct entity which possesses any debt or receivable, including mortgage debt, right? Government securities, okay? Uh, Such other instruments as may be declared by central government to be security, and rights or interest in security. So the word security is very exhaustive. If you look at the SCRA definition, it's very, very exhaustive, right? As security represents the terms of exchange of money between two parties. Okay. Now this is one feature of security. Feature one, if I have to call it, right? So this is the feature, correct? Securities are issued by companies, financial institutions, or the government. They are purchased by investor, and security ownership allows investor to convert their savings into financial assets with an expectation of return on the investment. This is a key feature of security. Why are you buying a security? This is the reason, right? Uh, so what happens is that if there are issuers, okay, they are able to reach a broad group of investors through this securities market. In absence of a well-developed securities market, a household with surplus fund may have to hold of all their savings in bank deposit, right? So basically, securities market is taking you beyond all this, right? They are giving you the option to invest in bank deposits, correct? But with different types of equity and fixed income securities available with varying level of risk and return, investors can choose to invest their surplus fund on the type of security that suits their specific preferences. This is very important, right? This is something that we all must know. Uh, it's the responsibility in a way of the issuer of the security to provide the terms on which capital is being raised. This is very, very important, right? And the investor has a claim on whatever security provides, like interest, coupon, dividend, or whatever it may be provide. Okay. And the word securities market must be understood here, right, through this definition. So what is the definition? Very clearly saying the market in which securities are issued, purchased by the investor, and subsequently transferred amongst investors is called as the securities market. So how do we define securities? Security market is a place where securities are issued, they are purchased by the investors, and then subsequently transferred amongst the various players, right? So we need to know one thing very clearly, that the word securities, it has to be understood in the right context. Securities, what you can use the way you want, right? But there is a very very technical definition of it given under SCRA section 2H, okay, and it lists multiple types of securities and also provides the exclusion, right? And then if you look at all these aspects of the security, you will get to know that security is really a very, very very exhaustive in terms of containing, or in terms of capturing the different types of securities. It is really detailed out, correct? Security has some features, so you need to note down these features for your exam, from your exam's perspective, and that is where you will get the help, correct? Now let us move to the types of market. Okay, so there are two types of market, and I'm sure many of you know this. Primary market is a market where securities are offered for the first time to the investors. Okay, so they can be offered in different ways. Okay, so primary market is used by companies for raising fresh capital from the investor. That is why it is being issued for the first time, because the capital itself is fresh, right? Primary market offering may be public offering or to a selected group of investors. So public offering is for everyone, but private placement is for handful of investors. This is very important, right? So if there is a question in the exam, it could be, when a security is offered to handful of investor, what is it known as? So your answer is private placement, right? Shares may be offered by new companies, or it can also be offer for sale. Okay, now what is offer for sale? These are the things that you need to note down for exam. Offer for sale means where an existing large investor or investors or promoter offer a portion of their holding to public. Now offer for sale means, already issued securities are being offered to the investors. There's somebody who's owning it them already, right? And then the offer is being made to the investors. That is the meaning of offer for sale. So how are the public issues in primary market done? It is done through initial public offer, which is shares being offered for the first time. Further public offer, which means a company which has already got its shares listed on the stock exchange, is offering additional shares to the investor, different from offer for sale, right? So when a company wants additional capital, okay, for growth or repay its debt, or to repay its debt, it raises equity capital through a fresh issue of capital, which is called as the further public offer. Okay, sometimes it is also called as follow-on public offer, right? Then a rights issue means rights issue is an issue which is given to the existing shareholders. Okay, which means unless you are a shareholder of the company, you will not get shares in the rights issue. So this is the word that you need to kind of, or this is the sentence that you need to kind of note down. In rights issue, the offer is required to be made to the existing shareholders on pro rata basis, on based on their holding. So if you are holding 100 shares and the company says that it will offer one share for every two shares, then you will get 50 shares, right? Because it's on pro rata basis that you get. Then there's a private placement, about which we have already spoken. Okay, private placement has to be made to less than 200 persons. Please note down this for exam. Okay, so in exam your question could be, what is the number of, or what is the maximum number of investors to whom private securities under private placement can be offered? 50, 100, up to 200, okay, or less than 200, right? And more than 200, right? Or such kind of a question may come, so you need to look at that. Then you have the other aspect, which I've kind of skipped, but I will take you back. Preferential issue, which means preferential issue is when a listed issuer issues shares or convertible debentures to a select group of investors, right? Now this is called as the preferential issue. This is another term that you need to know. The issuer is required to comply with various provision under SEBI Act related to pricing, disclosure, lock-in. Okay, so that's called as the preferential issue. Then you have QIP, which is qualified institutional placement. Okay, so qualified institutional placement is a private placement, but it is made to identified categories of investors known as QIBs, or qualified institutional buyers. So please note that QIP is made to QIBs. Now this is very interesting, right? So you make qualified institutional placement, don't invite every investor, you invite only qualified institutional buyers. And who are they? They are institutions, they are banks, they are financial institutions, they are mutual funds, right? And SEBI has defined the eligibility criteria for corporate to be able to raise capital through QIP and other terms of issuance. So this is something which is very clearly mentioned by SEBI, right? Then additional shares may be issued through bonus. Bonus does not mean that you are getting bonus like as you get from your employee, right? Bonus means you are getting some shares from the issuer, okay, if you are holding the shares already in a particular ratio, okay. So bonus share is always given to the existing shareholders, okay. And if a ratio is mentioned like this, 1 is to 3, which means you will get one bonus shares for every 3 shares held. This is how the description is, and do not miss this out, right? So if somebody says bonus is in the ratio of 1 is to 4, that means for 4 shares you will get 1 share, right? uh, Company needs to get a board approval to issue the bonus shares, okay. And in some cases the shareholders of the company also need to give an kind of go ahead for this. That's very important. Bonus issue cannot be withdrawn, and there will be a record date for all the bonus offers. Now please note that record date thing that we have discussed just now, you may get a question in exam which will ask you which of the following is not true about bonus issue, and then you will get 4 or 5 statements and you have to select what is not true, correct? Then there is an offer for sale. Offer for sale means what? Offer for sale, I have already told you that when existing shareholders say that I want to sell my shares, don't issue new shares, we will sell our existing shares. Like government of India, which owns ONGC, okay, it has come out with an IPO, but later on to sell stake in ONGC, it announced to offer for sale, which means government of India, which is an existing shareholder, is selling a part of its ownership. But offer for sale can be made by anyone. It is not made by government only. So please note that offer for sale is a form of share sale where the shares offered in an IPO or FPO are not the fresh shares issued by the company, but an offer by existing shareholder to sell the shares that they have been already allotted to them. This is the crux of offer for sale, right? So primary market had all these features. Then we have secondary market. What is secondary market? Secondary market has many forms, but the two known forms are OTC. OTC is a transaction that happens between two parties, a mutually agreed transaction. However, exchange traded transactions always happen on recognized stock exchanges. And the point to be noted is that stock exchanges in India are also recognized under SCRA. That's very interesting, right? So, secondary market has two types or two categories or two segments, which I have already told you. Please note them down for your exam. Now, what are the other terms that will come across? Will come across trading. Trading is simple: buying and selling of securities on recognized stock exchange as well as on OTC. What is clearing and settlement? So, clearing and settlement means clearing is a process through which what a buyer is supposed to give and receive is identified, and the same applies to seller also, okay. So clearing and settlement are post trading activity. So clearing is about identifying the net obligations of buyers and sellers, which I have already told you. And then you have settlement, which is after the clearing, okay. So settlement is the situation in which you pay whether when there is a debit of bank account and securities account, and there is a credit of bank account and securities account. One is called as the pay in, okay, which is the paying of the money, and second is called as the payout, right? That's the word that you have. You should note these words because they may kind of come out at some stage later on. And there's a body called as clearing corporation within the stock exchange, which is which does the settlements of securities, okay, for whatever securities which are traded on the stock exchange. The details of all transactions performed by trading members are made available to clearing corporation, and clearing corporation gives an obligation report to trading members and custodians who are required to settle their money or securities obligation within specified time, failing which they are supposed to pay penalty. So please note that all the obligations of members are notified to them by the clearing corporation. So clearing corporation will tell a broker, see, you are supposed to give 100 shares of this company, 200 shares of another company. You are supposed to give this much money. All that is given by the clearing corporation. And clearing corporation provide full novation of contract between buyers and sellers. Novation is a very, very important term. Please do not forget it. What does novation mean? Any idea? Novation in simple term means that that the clearing corporation is acting as a counterparty to the trade. So, what is the meaning of novation? Let me put it here. I'm putting a comment out, of course, at a different place. Novation means clearing corporation, which is CC, acting as a counterparty to the trade. And what is the objective of it? To reduce default risk. Okay, so you are reducing default risk through novation. Novation is a term that you must know, right? Do not forget the term novation. Clearing corporation does the risk management so that none of the parties should fail in the transaction. They ask for margins. Okay, the margins are initial margin and mark to market margin. What is the margin? Margin is a part of the total traded value that you have to deposit with the exchange through clearing corporation. So basically, clearing corporation will ask the buyer and sellers to deposit these margins, right? And these margins are calculated through a method or a way which is called as value at risk. Value at risk means how much value is at risk when you trade, and that is what defines this value at risk concept, right? So these are margins concept. Margin you must know. Please note down different types of margins in your book for the exam. Who are the market participants? Many. Stock exchanges. What do they do? We know. Stock exchanges are the place where securities are traded. Clearing corporation. What do they do? They are legal counterparty to all the trades. Huh? This is their job, right? And it can be part of exchange or a separate entity. Both are possible. Do not forget this. Okay. What is a depository? An entity that holds securities, which we have already learned, in electronic format. What is a depository participant? Depository participants are agent of depository, right? They act on behalf of depositories and they perform all the jobs which are supposed to be done as part of securities settlement, right? So they actually open the account of the investors, help in transferring the securities, receiving the securities, pledging of securities, many other activities that these DPs are doing, and they are appointed by the depository with the approval of SEBI, and many entities, different entities are eligible to become DP. Even a bank can be DP. ICICI Bank is a DP. SBI is a DP, right? They are all DPs, correct? Then you have trading members. What is their job? The name itself says that they trade. They trade on behalf of their clients and they can trade for themselves also. Okay. Trading members can have different types of, legal existence. They can be a legal entity. The individuals can also be the trading members, right? Trades have to be routed through trading terminals of registered broker. You cannot trade on stock exchange directly. You have to always go to a broker. OTC trade you can do mutually, but the trading on the stock exchange has to be done through a broker. And SEBI gives them license. Huh? So SEBI is, SEBI registration to broker is granted based on availability of adequate office space, equipment, manpower, past experience, securities trading. All these are the parameters. Of course, there is a detailed list of parameter which is not mentioned because the idea is to give you basic understanding. And brokers earn money from the fees that they charge, which is brokerage, right? They also provide services such as research, analysis, and all that. Earlier, there used to be sub brokers, but they are now called as authorized person. They are called as APs. Okay, so APs are who? Authorized person. So you should know about them. Custodians, so well, they are appointed by uh, 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 you know institutions. Typically they're not created by institutions, appointed by institutions. What I'm trying to say, they're a separate legal entity, and what they do is that they keep shares on behalf of securities on behalf of their clients. The word custodian comes from the word custody. When you say something is in my custody, you are holding it, right? So the custodian is an entity which is vested with the responsibility of holding funds and securities of its large clients. The individuals don't use custodians. Huh? Of course, some high net worth individuals may use, but custodians are costly. Individuals keep the custody of their securities themselves, and with the help of the broker, they are able to do the transaction. But LIC will need a custodian. Mutual funds will need a custodian, correct? The custodians help in maintaining clients' accounts and fund, collecting benefits or rights like a bonus that a company may give, dividend that a company may give, keeping client about the actions taken by informed keeping client informed about the actions that they have taken on their portfolio. All this is the job of custodian. You may get a question on custodian for sure in the exam. Please do not forget to go and note down details of what is the job of a custodian. This is an entity which is less not known as much as the broker. So there are typically questions asked on custodians. Then we have clearing banks. Just as depository keeps shares, clearing banks keep money. They open account with the clearing corporation. Basically, they are authorized by the clearing corporation. They don't open account because they are anyway banks, right? But they are authorized by the clearing corporation, and they act as the clearing member. They take care of fund side of the transaction. So security side of the transaction is taken by depository and depository participant, and fund side is taken by the clearing banks. Merchant banks, they are registered with SEBI and they act as issue manager, investment manager, lead manager. They help an issuer access the security market with the issuance of security. That is what they do, right? And they are single point of contact during new issuance. They evaluate the capital needs. So basically, multiple activity, they get structure and appropriate instrument, get involved in pricing of instrument, manage the entire issue process until securities are listed on the stock exchange. So they are the one who are helping companies, list their securities on the stock exchange, right? Now we have institutional participants. Remember, we have individual participants, individual investors, we have institutional participants. Banks are there. We know banks. What do? They accept deposits. Okay. But they also invest in shares. They invest in fixed income securities. They are investors also. And they are issuers also because banks may raise capital from the market. We have mutual funds. They have emerged very popular recently. They invest on behalf of investors. We have pension funds, we have insurance companies. Pension funds, basically what do? They are managing pension, right, for their customers. We have insurance companies. Insurance companies take premium from you. What do they do with the premium? They invest. Where do they invest? Into different assets, into different securities, right? We have alternative investment fund. There is a detailing of it in a separate chapter, but alternative investment funds can be the venture capital fund, angel funds, private equity. They are of three types: one, two, and three, which we have discussed in a separate chapter. You can go and see there in detail. You have foreign portfolio investors, those who are from outside India but want to invest in Indian securities because they want higher returns, and India has been a performing market for a long time. We have EPFO, Employee Provident Fund. What do? They accumulate money of people who deposit it in employee provident fund, and they invest in different securities including in equity. We have national pension system which was started in 2004. The idea was that people will be able to generate a corpus for them which will take care of their post retirement requirements. So NPS, basically, you can open an account with an NPS, tier 1 and tier 2 account. And NPS, which is basically, a scheme managed by various fund managers. You can give your money, they will deposit your money into different securities and generate return for you so that you can benefit from it once you retire. Family offices, very popular again. Family offices are ecosystem which the families build around itself to manage, wealth. So this is basically for those rich corporate families, okay, who have huge wealth, okay, and they have family offices, okay, and administrative support to investment management services with a view to coordinate with family financial needs, lifestyle goals, and charitable givings and state planning. Charitable givings in many rich people like Azim Premji and all, they also do what we call as donation or giving money for noble causes, right? And this they take care of ultra net worth individual, high net worth individual, not just high net worth, ultra high net worth. Means you need to have lot of money. Corporate treasuries, banks have treasuries, but companies also have treasuries. And what are they? Focus area of corporate treasuries has been debt management to capital structure management, with the key responsibility of raising long-term fund and minimizing cost. So corporate treasuries are with companies. ITC has a corporate treasury, ONGC has a corporate treasury, and they are investing into different assets and securities. And last but not the least, all of us who are retail investors, and retail investors have been defined as an individual who applies or bids for specified security for a value not more than 2 lakhs during IPO and FPO. That's what is a retail investor. Of course, if you get 10 such IPOs, you will be applying for 20 lakhs. So 2 lakh is per security limit, not the overall limit, right? So that's your retail investor. Now I have a set of questions for which answers are already given. I mean, I did not even explain that to you. But the idea behind making this video was to kind of take you through what is securities market, how does this work, and I hope you were able to get the idea. Please do write a comment in the comment section as to it has made sense or not. What will you like me to change so that I can make subsequent videos more meaningful for all of you. Thank you.